Yeah, hello everybody. It's nice to see you again, although I don't see you, but let's keep up the illusion. Well, this small chapter will be an overview about tax exemptions in the German Inheritance Tax Act, and what I ask you to do is just to get an overview and to be able to recognize there is perhaps an exemption and then look it up in the tax acts when you come to a case where such a thing like um, where an event which might be covered by a tax exemption might occur. I try to give you a kind of an overview which categories of tax exemptions can occur, and well, I must admit that I do not deal with these questions very often, so it's a relatively rough categorization. The first class of tax exemptions which you might identify is tax exemptions for reasons of simplification. There are certain things which might be seen under a formal aspect as a donation or a gift, so they would in principle be covered by the inheritance tax, but it would be really an enormous burden under bureaucratic aspects, and it would probably be yeah, heavily unattractive um, and even not promising under the fiscal aspect if certain things were taxed. For example, somebody dies, and now naturally all these small items in that person's household are inherited by the heirs. So the forks, the knives, all the rest of the cutlery, some old books, shelves, carpets, most of them later you throw them away because you don't need them, but they have a market value, and so they would count. That must be taken into account. And if you want to simplify lives for people, then you would probably say forget about that. Um, Indeed, you find exemptions for such a situation somewhere else too. Birthday presents should be an exemption for that. Or Christmas presents. Can you imagine after Christmas the whole nation sitting down and making a list? Which presents did I get from which person? And am I now beyond the tax-free threshold, the personal allowance which I have in relation to that person? That's really that was really a tax advisor's dream Christmas. Um, Sometimes is a second category, a certain feeling of equity in the sense of what is just and fair and what is decent behavior. Huh? So one could say social motives sometimes justify a tax exemption. So, for example, somebody has borrowed money from you, um, 100,000 euro, and now, or let's do it a bit on a lower scale, let's say 10,000. Somebody borrowed 10,000 euro from you. Now that person fell into poverty. And now you want to do something good and say, okay, I see your situation. You had an accident, no car, but now you have a wheelchair. You will never earn enough money. I don't want to worsen your situation. Forget about your debt. Now that means you donated 10,000 euro to that person, although no cash was moved there. And that would trigger a tax, and that would probably be a sign of very bad taste if now the fiscal administration came and would probably sue that wheelchair inhabitant now for tax fraud because that person didn't declare the 10,000 euro donation which you made to him or her when you renounced on the payback for the credit with regard to the poor situation of that person. So there might be some categories like that, or very often you know that in income tax also donations for organizations in the public benefit, so-called charity organizations, are tax-free. The same should also apply in the area of inheritance and gift tax. If you transfer 10,000 euro to the Red Cross, that is nothing else than a donation which saves the state the need to finance that organization with its own money, so with taxpayers' money. And so the idea is if somebody gives 100% to purposes which otherwise the state would have to pay, then it would be highly indecent to demand that you are still punished for that by having to pay taxes on these 100% in addition. So social policy might justify certain things. Then there is often the wish to shield certain groups from the need to sell the underlying assets. Very often that might go back to a fundamental misunderstanding of what the nature of a tax on wealth is, because if you have the idea, well, if we really tax that asset, then that person will be forced to sell that asset and can't keep it. Well, that is the inbuilt effect of every tax on wealth and property, that you either have to earn enough money that you are able to pay off the tax, or that you will have to part with a bit of the property. The idea to say property itself justifies a taxation, and not income, but property itself justifies a tax, that naturally entails that you will have to give away a bit of that property. And now, if you have an emotional tie to your property, then that always hurts. And so to say, that hurts someone's feelings, so we can't carry through our tax claim here. That's too harsh. That's a fundamental misunderstanding. Taxes always hurt taxpayers' feelings. So that cannot be an argument. And well, if you don't feel hurt by a tax, then go to a psychiatrist. You have a strong emotional problem. On the other hand, if you really want to protect people's feelings, you could never ever tax a single dollar on Scrooge McDuck, because the guy loves his money more than other people love their wives. So this third category is in a certain way highly doubtful. So there will be an enormous increase of, or a higher need for justification for things there. Or there should be a kind of a search for better solutions which perhaps prevent these people from the need to sell things, but on the other hand, which nevertheless practice justice. And one might also say reasons or tax exemptions where the reasons have to do with the chances of people in competition. That relates especially to businesses, and where there we are going to talk about later. Now let's just hush through the most important exemptions. Household property, or sometimes called chattels or movable property. Well, as I already said, all the books here in the shelves behind me, if I drop down dead, somebody will inherit them, and that person would then have to declare the amount of the inherited books, market value at the moment of my death, and so on. And that is a mass of work, and that usually you do not really feel enriched if you inherit all the everyday life stuff of somebody else. So I don't know what I can expect from my death, but I have the premonition, that feeling in advance, that whoever is going to inherit my estate will not completely rejoice about inheriting the books. And having to count them all and to find out the market value by by eBay or so, or is probably a curse, or will cause them to curse me. And so probably just for reasons of simplification and with an eye to how the heir really values that as an enrichment or not, Germany says there is a free allowance, 41,000 euro, so in former times 80,000 Deutsche Mark, and that's left tax-free. The idea was evidently one wanted to avoid for the average citizen the need to count the household items and to evaluate them. On the other hand, naturally, if you just say every household item is tax-free, then we would try probably to invest as much as we can in household items when we get old. We would always select the highly expensive ones. So the golden cutlery, or better the silver cutlery. I don't know if gold is strong enough to be used as a knife. And so on, and so you could pass on huge amounts of value to the next generation or to your heirs tax-free. So probably a kind of a cap for the free, or a limit for that exemption makes sense. Well, as far as I know, such an exemption also exists in other laws. For example, I believe to remember that in the English inheritance tax, there is also such an exemption for household items or chattels, but I don't know if there's a monetary restriction. With regard to the German exemption, here the free allowance of 41,000, there must be a remark made under all circumstances. If my understanding is correct, that the main purpose of that exemption is to spare the most people that effort to count household items and to make a list with the market values at the moment of death, then this is not sufficient, because when you go to an insurance company and want to make a contract for a household contents insurance, if you are from Germany, you know that as a Hausratversicherung. Then the insurance company usually says, okay, let's just estimate the value of your household items. How many square meters does your flat or your rooms have? And very often they say, okay, let's multiply that with 1,000 euros. That will be sufficient. Less is problematic. So if you have a flat of 60 square meters, already the insurance company would already suppose that you come near to 60,000. So if you have an average wealth, this will probably not be sufficient. So, and if it's not sufficient, so if you inherit household items which have a value which might exceed the threshold, then you are forced to count and make a list and evaluate. And so then the sense of the exemption the purpose is not really fulfilled. And naturally, the explanation is again that the free allowance was set decades ago and has never been appropriately adjusted to inflation. If the heir is one person from tax classes 2 or 3, then that exemption is not even granted. Then it's put together with another exemption for movable property and limited to a total amount for both of 12,000. So that's really then a sham. If you really have the bad fate that you inherit the estate of an uncle or of an aunt, then automatically everything which they own in their household becomes your property. Then you have a very small personal free allowance, and the household allowance is also very quickly exceeded. So when later you clear the rooms of the dead person and you probably throw everything away or give it away for free, then you must know that first you inherited everything, so you became richer by the market value of the household items, and when you then said, I don't need them, I give them away, for me they have no value, then this is not the opinion of the fiscal office. The fiscal office said these things had a market value, and then you have a problem. So you have to be very careful. And so you see here that the simplification effect of the first exemption, which we mentioned here, is not really fulfilled. In addition to the household items, there is also a small exemption for other movable property not yet covered by the household thing. Movable property can then be other objects within the household or outside, so it might be a car. Again, for tax class 1 only. For tax class 2 or 3, that's not sufficient to simplify lives. So what you and I should remember is, if you ever practice on a case and there is household items mentioned, or there is the one or other movable object mentioned, for example, a computer or so, then you know can be tax-free as far as everything together doesn't exceed these limits. Now, there are now the other simplification rules. The usual gifts are tax-free, which are made on the usual occasions. So, birthday present, free. You visit a party, you bring a bottle of wine. I always recommend to buy Primitivo. This is not only a brand of wine, but also a clear judgment about the person who invites you. You are a primitivo, in German, a primitive person. Birthday presents, party presents, Christmas presents, all that is tax-free. Presents which you get if your parents give you a present when you pass your exam. So this could be a valuable advice which you could give in your own interest to your parents. Hey, daddy, mommy, if you give me something when I pass my bachelor exam, or if I pass a tax exam, then it's tax-free. But surprise and shock, only as far as these presents are made on the usual occasions. Okay, that would always be the case, and insofar as they can be regarded as usual on that occasion, usual and fitting. So naturally, if birthday presents are tax-free, then that might be a temptation for people who know a bit about tax to say, hey, child, today is your 18th birthday. Now father wants to make you a little present, and what can a young person more need than a fresh Supply of money. We go to the notary, and now father makes you a birthday present of 500,000. You deserve it. This is first a very nice or a bit idiotic father, but congratulations if you have one of that category. But that's the problem now. It would be a clever trick to circumvent the free allowances and the 10 years limit. You would always just make donations of enormous amount on the usual occasions. So it would be a loophole. Naturally, you must close the loophole. And so the exemption only applies to usual presents. Now, we can all agree that a usual present is not 500,000 for your birthday. And 500,000 is also not a usual present, which you get on Christmas. On the other hand, if aunt or uncle say, hey, guy, girl, don't know what you really like, and we think the best thing is we give you some cash for birthday. If it's 50 euro or 100 euro, that's probably usual, that's appropriate, that doesn't violate the discretion which one has. Probably it will not afterwards appear in the local newspaper birthday present of 100 euro as if it were a thing which never happened, so that can still be regarded as usual. Now, the question is, what happens if the Sheikh of Kuwait gives you a birthday present? The problem is, what is usual for the Sheikh of Kuwait is far from what is usual from your perspective. So the question is, what counts? For example, if you get, let's say, 5,000 euro cash in hand from the Sheikh of Kuwait, for the Sheikh of Kuwait, it's probably usual. There have been stories some 20 years ago that when in Saudi Arabia, some member of the nobility mentioned to somebody else, oh, that's a nice Porsche car which you drive, that the other one felt force, for reason of politeness, to say, oh yeah, indeed, if you like it, you can have it, here's the key. So generosity was there, usual. Now, from your perspective, poor student, 50 euro, usual. The question is then, who decides what counts? And the German law said, well, yeah, there are arguments for both, and we say what is usual is to be seen from the perspective of the person who gets the present. By the way, that's always also a social recommendation. When you are invited, make a present which fits to the expectations of the person whom you give the present. For example, if you are invited by somebody who is rather poor, and all the other guests are rather poor, don't show up and make a present of 10,000 euro. This is that spoils the whole evening, and this is far more of a humiliation than of a present which fits the occasion. So probably here the German legislator is right in the perspective which it chooses. Naturally, we would prefer the other perspective, but well, that wouldn't convince everybody. Then another socially motivated exemption is a strange thing, because imagine Mr. Smith lives together with, let's say with his long-time girlfriend, but they never married. That is Mrs. Miller. And Mrs. Miller has 3 children from a previous relationship, which are seen by Mr. Smith as stepchildren. So they live in the household happily ever after until Mr. Smith gets a heart attack, falls down, and is dead. Now, unfortunately, there is never testament made. Mr. Smith never thought about death, and so Mr. Smith dies intestate. So let's say the closest relative is Mr. Smith's brother. So now Mrs. Miller and her 3 children are living in the house of Mr. Smith's brother. So in the house of somebody else, free of rent. One could say this is a donation if I let them live there. Financial advantage. One could even say, I'm the owner. What do these, Mr. Smith's brother could even say, this is my house. What do these completely unrelated people do in my house? Hey, I kick you out. So German law here has a clear rule. If in that case the house is inherited by somebody else, the people who live together with Mr. Smith as his family members and who were supported by him financially and shared the household have a right to remain in that house for the next 30 days. So you have some time to look for another house, but you have to do it quickly. And that is a right which has a financial value, and that right was exempted, which is understandable. Imagine really you were telling somebody else, hey, my long-time partner died. And then brother showed up and said, hey, this is my house now, leave. And then I said, well, I have a right to stay at least 30 days and to arrange my moving. And then somebody, when I insisted on that, somebody from the fiscal office knocked on my door and charged me with tax for the 30 days free of rent. That would probably be felt as outrageous. Huh? To grant somebody that 30 days period to move out is just a matter of fundamental decency, and it's a kind of elementary morale. You don't do that. From the last moment of life of Mr. Smith, and Mr. Smith's brother is there with the watch and says, okay, brother is now dead, this is my house, move out. This can't be, and that the 30 days have to be tolerated is not really an enrichment, also apart from really formal thinking people. By the way, what is interesting in that exemption is that the German legislator regarded it as necessary to put down such a very, very evident thing into the text of the law. We have learned in the basics that the law is binding and that a general rule applies wherever a special rule does not apply. Every enrichment is part of the tax base, and that you have to enforce any tax claim which exists if there is no special rule. And evidently, they said there might be some tax official someday in the future who stumbles across that rule and then says, but this is a financial advantage, and if there is no special exemption, I will have to tax it. This is my duty. I have to treat every taxpayer who fulfills the general clause alike. And so to prevent that, they had to clarify this by writing it down clearly. So that allows the conclusion whenever, or that underlines our conclusion and our experience, whenever you have to deal with a general clause which is fulfilled, and it leads to a result where you say that can't be true, and the answer is, oh yes, it is true, and they will enforce it, apart from the case where you can find an exemption which confirms that this is indeed tax-free. Good. So there is another exemption, You know that when you are married, or in case of some of you, but when you are married, that then you form a kind of a lifelong partnership where you share your lives together economically, emotionally. Um, you form a kind of community. And so within a marriage, it would often be seen as unrealistic if you really follow the strict rules of civil law. For example, imagine you go to a restaurant and then a married couple says, well, everybody of us pays what he or she consumed separately. Or father takes mother together with him in the car and they drive to another city to go shopping, and father later says, mother, I had gasoline costs and it was a trip of both of us, so 50% of the cost go to you, please give me the money. Under civil law, one might think about such strange ideas, but not in a marriage. It's unrealistic. And it would be unrealistic if people dealt with another in a marriage this way. And now, if you know that sometimes, well, the one partner pays both for both of them, then you must know that also happens from time to time when people buy houses. For example, the married couple M and C buys a house together, so it belongs now, as they bought it together. They bought it with equal shares, so 50% of the house belonged to M and 50% belonged to C. Now they took up a credit together to finance the acquisition of the house, and now let's say C just does household work, and M, let's say M is the wife, and the wife is a medical doctor, and C said, okay, then I take care of the children, I'm the husband. And now she pays back from her salary all the credit installments. So below the line, the house belongs 50-50 to each of them, but the costs for the house were paid back entirely by M. So what happened is that although nobody ever thought about it, M donated half of the value to the house to C. And this indeed went unnoticed for decades. Um, and after some decades, somebody said, well, that happens everywhere, very frequently within marriages. In principle, that's a huge donation which the one spouse does to the other one. A bit undercover, but it is, and we can't justify to ignore that. And then naturally the legislator said, okay, we must clarify that we don't want that, and under which circumstances we don't want that. Naturally, they said, well, this is regards the family home, not capital investments. This regards, as far as I understand it, and I hope I do it correctly, only one family home. Yeah, and so that's tax-free then. It might also happen that M and C buy a house together and M pays the price alone so that they don't need a credit. In that case, M just gives half of the house to C. It might also be that M and C live in a house which belongs to M, and M after a while says, well, we should share the property of the house, so you get half of it. Let's visit the notary. Now you are my co-owner. All that can happen. What even can happen in a far more simple way is that M and C own a house together, and the facade must be uh, refreshed, new painting, or the roof must be repaired. And so one of the two alone pays the repairs or the new painting. In that case, Under civil law, two owners, everybody should have to pay half of the cost, but one does both. That should also be tax-free, because in real life, this is not primarily seen as a donation and a gift. That's more a reflex of the situation in a marriage, that within a marriage you don't count so bureaucratically that you always say, hey, husband, today you ate half of the dinner and I paid for all the stuff where our dinner consisted of completely, so give me half of it. And you also do not follow that approach when it comes to expenses which refer to the common household or the common living usually. And so here an exemption makes sense. Yeah. There is also gifts and donations between living persons if they are just made to grant an adequate life or living for the recipient. So if your parents support you financially, you do not need to be afraid, because first, it's probably not even a donation, because under civil law, parents in Germany are forced to support their children financially until they have the possibility to get a proper education. And if they pay more than they need to pay, that would still be a gift or donation with the aim to finance your current cost of living. So forget about it. Also, if the payments are made to finance your education. So if you decide to register for a master program after you already worked on a job, then your parents are, I believe, I'm not an expert in that field, are under German law out of the obligation, no longer obliged to support you financially. That should then be your own stuff. But if they say, okay, yeah, I would be so proud on a master in the family, here is 15,000, I pay for your master program, this is then a donation. It's made voluntary between living persons, and it's generous, but it would be tax-free because it's made to finance your education. Good. In connection with that is another exemption to be mentioned. For example, if your parents were not so generous and said, well, I see you want to have a master's education, but we are not going to pay for you indefinitely, so there must be some end at some time. So let's agree on a compromise. We lend you the money interest-free and you pay it back later when you are on the job. So you don't need to go to the bank. You get the money from us. We trust that you pay back. And okay, so we are a bit generous, but not too generous to you. Well, perhaps for pedagogical reasons. And now, what happens a bit later, before you can pay back, your parents die. And so the credit is never paid back, because you inherit the claim against yourself, so the credit is automatically extinguished. You get richer because you get rid of debts, and in that case, that is a bit tax exempt. That can be better explained why that's socially motivated. Because imagine, that's also a possibility, somebody wanted to contribute to the cost of living of somebody else, but under a decent pretext of, okay, I borrow you the money which you need to finance an adequate living at the moment, you later pay it back. And now later, unfortunately, somebody, the person who gave you the money died, and as you have remained so poor, that person who gave you the money wrote in his or her testament, my heirs have to renounce on the payback claim. So by that testament, by that legacy, you are on paper enriched. You got rid of a debt of 10,000 euro. Now you would have to pay perhaps inheritance tax on this enrichment. And here the law says it would be regarded as a bit indecent. Huh? Mr. Rich, for example, said, well, when I die and Mrs. Poor or Mr. Poor is still poor, then you have to renounce on enforcing the payback claim. You have to formally renounce on the credit in order to help Mr. B or Mr. Poor financially. And the consequence of the generosity would be, instead of you, the heirs, the fiscal office now knocks on the door and tries to enforce an inheritance tax payment by Mr. B. That would be a catastrophe, because it would even worsen the situation of that person. That would also be something in very bad taste, and so that is the reason why that was declared as tax-free. Settlement number 9, some other socially motivated thing. Very often it happens that old people are taken care for by relatives, by neighbors or others who spend a lot of time just free of charge. And so, well, if you have grateful people, it is probably a sign of good taste then to write in one's testament, to my neighbor, Mrs. Abdullah, there goes a legacy of, let's say, 30,000 euro, because my children were always everywhere far away, had good jobs, but everywhere all over the world they could not even visit me. Mrs. Abdullah, who never was obliged to help me, was always there for me. She always helped me, and well, I couldn't or I didn't want to give her money during my lifetime, or could not give enough during my lifetime. When I leave this world, there shall be a legacy for 30,000. And there is then a tax exemption. Up to 20,000 euro can remain tax-free for people who took care. If that is below the line, only a decent and adequate remuneration for all these caretaking services which somebody had done for you during the last years. Probably the limit seems to be necessary, because otherwise one would always write into one's testament, my daughter D gets a legacy, or gets in advance, before the rest of the inheritance is distributed, gets in advance 200,000 euro because she took care of me during my last months. So you could probably then avoid, or let's say divert, huge amounts of money from the tax base with that trick. And so to avoid that, there was a limit. So if there's really much to do to care for somebody else, well, the financial advantage which you have then from the tax exemption is not really so high. So you can remain proud of yourself that you did it out of generosity, even if there are some lines in the testament. It's not a good tax saving model to take care of neighbors. Well, it's rather the idealistic approach, but if you do it, then you get at least a bit of it tax-free. Yeah, so Also, sometimes people make a present to others because they do considerable services for them in old age or so. And you don't need to wait until you die. You can also pass over a bit of money as a generous gift to some person like that. That would also, within certain limits, regard it as tax-free donations. A rather tragic thing, which is also taken into account, is this situation that it might happen that parents or so made a present or gift to their children. Let's say your parents say, hey, son, um, we have, now you're going to marry and to found a family. And you know, we have a piece of land somewhere at the other corner of our village. And daddy and mommy have thought about that. And now we have decided you get that piece of land and we build a house on it for free for you and your wife. That's a thing which might happen. Now, unfortunately, 2 years later, son and daughter-in-law die in a car crash. No children yet. So the house is again inherited. It falls back into the property of the parents because closer relatives are not there. In that case, even the fiscal office might, some of them, might develop a bad conscience and have the idea, well, it's rather bad taste to have these people, these parents, pay inheritance tax on a house which originally was theirs or was paid for by their own money and now by a tragic event falls back into their property. Especially as we have now the second taxable event. The first one, granting over or giving over the house to the children, was a taxable event in principle, and if it now falls back to the parents, this is again a taxable event. Probably very bad taste to take taxes here. So the problem is not every fiscal officer would have the feeling this is in very bad taste, and every fiscal officer is trained not to react to such a feeling and to enforce the law whenever it formally applies. So there was only one possibility to write down into the law, this is tax exempt, this particular constellation. Something else, if you are disinherited by your parents or by close relatives, you know, or you remember, I hope, that under German law you can claim a compulsory minimum legacy. Half of your legal share, which you would get if there were no testament, can be claimed from the heirs. Now it might be that you got disinherited and you say, well, I respect my father's or my mother's will. They wanted that my sister gets everything. They paid a very good education for me. I have an excellent job. I won the Nobel Prize yesterday. And my parents made it possible that I took part in the Olympic Games and I got 2 medals. I really have no reason to complain. My sister had smaller chances. So my parents have done far more than necessary for me, and my sister deserves to get everything which is left over. Well, that's just and fair, so I don't complain, I don't raise my claim. And renouncing on the claim or not bringing it forward is not regarded, either not regarded as a donation, or if it had been made and then you renounce on it, that's tax-free. If you want to respect the last will of somebody and think that that's just adequate, then you are not forced to raise a claim just to avoid taxes which you otherwise would have to pay or so. Well, now some exemptions which are motivated by the wish to make it possible that the owners can keep certain property without being forced to sell it or to sell parts of it. I believe I already told you that this category is usually a bit problematic under fundamental aspects, but the first example here is rather convincing, because here there is an exemption for real estate property, pieces of art, collections, scientific collections, libraries or archives which somebody inherited. And if these things, if there is a public interest in that the collection or these pieces are kept together and get not sold, if these assets also do not promise financial rentability, but are, in contrast to that, more of a financial burden, because the costs of keeping them are usually higher than the revenue they bring, and the assets are open to public, to research, or to public interest or so, then it is possible that you get 60% exemption, or if you fulfill some additional exemptions, you can even inherit completely tax-free. Let's put it plain and simple. This will probably apply to castles inherited by families of the nobility, or several things. But now, it might indeed be that this might be a part of the national cultural heritage, that it's even a part of that heritage which we appreciate, that the owners of the castle are still the original family. And especially it might bring advantages or it might be detrimental if, for reasons of inheritance tax, the heirs would be forced to sell a part of an inherited library or to sell a part of an historic art collection, which would then diminish more and more. So you would destroy the historic heritage, which also has a value, an additional value, if it is an entity and if it remains an entity. Well, and what in that particular tax exemption justifies that we do not need to have a bad conscience in granting that exemption is that second condition here, that the things which you inherit usually cost more than they bring as revenue, because that means what these people inherited has, under formal aspect, perhaps a high value, but below the line, when it comes to the economic aspect, it's rather a financial burden. Because if you value that property not with the artist's value or the market value if it were sold, but with the present value, discounted cash flow, then it's rather a liability. And then you can justify it to say, okay, yeah, who inherits this and takes the obligation to keep it together and not to sell it has problems enough. We do not need to increase them by a tax. So here that could be justified as not being a privilege. If the public confirms, if a public authority confirms, okay, we have a public interest in keeping these things, these items in the land and in keeping them together and in the hands of the original owner's family, then if selling these items is forbidden now by law, at least for the next 10 or 20 years or so, then we can justify to leave them free of tax, because this advantage which you then get from inheriting that property is only a theoretical advantage. You can't sell, so the sales price doesn't really count economically. You have obliged yourself not to sell, and so you have the problem that the costs are higher than the revenue usually, and so it has then no financial value, so you can exempt it. Rather more of a privilege is the rule for houses. There is a special problem. Imagine, let's go back to the question where, or the constellation where two spouses bought a house together. Now, house belongs 50% to spouse A and 50% to spouse B. And now one of the spouses dies. The house had at this moment, let's say, a value of 600,000. So spouse B, the surviving spouse, inherits now the other half of the house, 300,000. Now imagine that spouse now has to pay inheritance tax on the 300,000. That money is not available. Now the both spouses were already relatively old, so spouse B will not get a credit from a bank, a mortgage on the house, because B could not pay back that amount from B's pension income. So B would be forced to sell the house and move out in order to pay the tax. That is regarded as rather harsh. So here the rule is that when you inherit your house or half of a house, a family home from a dying spouse, you are the surviving spouse, and you go on living in that house, then you can inherit that tax-free. By the way, I believe to remember that similar rules also exist in other states. At least for one state I have somewhere in the back of my mind the vague idea that I read something about that if there is an inheritance made by spouse A from spouse B, that then inheritance tax is usually rather generous because, well, they, in fact, in reality, they held their property together. And they regarded everything as this is already my property, okay, together with my husband or wife. But nobody ever runs through the house and says, well, you know, when I see that house, only half of it belongs to me, the other half is of Elfriede. Nobody thinks about that, and so most people would see it as bad taste now to force the surviving spouse to move out and sell the house just to pay the inheritance tax. However, this is an exemption which can exempt enormous amounts of wealth from the taxation. That can be highly unfair in relation to people who live in a flat which is rented and invested their money in savings in a bank account because they don't have that possibility. So one might say, yes, it's an understandable motivation to grant that exemption, but on the other hand, can that not be done in a way to avoid that the surviving spouse has to sell their house? Can that not be done in a way which is less generous, so which is less unfair to the persons who inherit property in other forms? My idea would be probably the purpose of that exemption, that the surviving spouse will not be forced to sell the house and move out, even if she or he is already 85 or so. It would probably be sufficient to say, okay, you get now, the tax is assessed and the due date is automatically postponed until the second spouse also dies or sells the house and gets cash. That would uphold justice and equity or equality of taxation a bit more than the present rule. Okay. Strangely, That exemption was limited when it was officially written into the law by the German legislator to houses in the inland, and for EU law reasons that was then immediately extended to houses in the EU or in the EEA. Naturally, that raises the question in how far, due to EU agreements with other countries, some houses in other countries might also be privileged indirectly due to non-discrimination clauses laid down in EU law. A perfect candidate for that might be Switzerland. One might imagine constellations where a family home is in Switzerland, and somebody has taken up a residence in Germany, let's say a second residence due to taking up a job here. And so it might be that a family home is inherited by somebody who is privileged under the treaties of the EU with Switzerland, under the freedom of workers granted there, and so that a non-discrimination principle could at least be tested in that area. The same applies for natural persons who opened up a business in Germany and for that reason moved here and also inherited a family home from a spouse in Switzerland or so on. One might even question if the freedom of capital does not force us also to regard family homes in certain states as privileged under certain circumstances. Nobody knows. One does not know the development of jurisdiction in future years. The fiscal ministry is evidently of the opinion that this is not compelling, but one never knows. I didn't properly think about the question. We could do this sometime in the EU part of the lecture. Well, good. There is also then a rule which says if a child also inherits a family home on the death of the parents, that also can be tax-free, can taken over tax-free. The idea is then also here we want to avoid that a child is forced to sell daddy's and mommy's home where you live in and which is your surrounding, always you regard it as your home, and now because the former owner has died you are probably forced to move out and sell it. That's harsh. That's a purely emotional argumentation. As the exemption is meant to avoid that an heir must sell the house, it's limited to cases where the heir can keep the house, doesn't have to hand it over to other heirs or to third persons, and where the heir does use that house for own housing purposes and doesn't move out within the next 10 years, apart from cases where there are absolutely compelling reasons which hinder you from using it for own housing purposes. You see already that makes things very complicated. The second thing is, okay, if you inherit a home, don't you have as a child a free allowance of 400,000? Wouldn't that be sufficient to avoid an enormous pressure to sell that house? Could a child not take up a mortgage and finance the amount which is necessary to pay the tax by a 30 years mortgage payable, which can be paid back in very small installments? Would not a mere postponement of the tax or the possibility to pay it in installments be sufficient? Is it really possible to justify that if somebody else inherits 500,000 in cash and has to pay an enormous amount of inheritance tax? Whereas somebody else inherits 500,000 in form of a house, and then on top of that there is still a free allowance of 400,000, free for other objects. Um, that is difficult to justify, that's my feeling. And here we have that fundamental misunderstanding that people think, okay, we take a tax on property. That's our basic decision on the property you inherited. That always entails that you will have to give away a part of that property, or if you just inherit one single piece, that you will have to take up a credit, or that you will have to sell it or parts of it. This is the always implied consequence of a tax on wealth. And now in the cases where we see a concrete example and where we can imagine emotions, we directly decide to forget about the whole concept and say, oh my God, that's now harsh. Now imagine if we imagine Scrooge McDuck, the guy inherits cash. And now due to our claim that, let's say, 20% of the cash has to be paid over as inheritance tax, Scrooge McDuck will whine and cry bitterly. Why? He has to part with some of his darlings. You know, Scrooge McDuck cherishes and loves every single banknote. He knows the printing date, the smell, and the numbers of all his banknotes by heart. They are his closest friends. Can you really enforce and tolerate such an emotional hardship done on a poor, lonely guy sitting in a money bin, surrounded by 3 trillion or fantastilliards of dollars, who will then intensely suffer if he has to part with some of the coins and banknotes? Isn't that a stronger and more enormous hardship emotionally than somebody who has to take up a credit on a house to finance the inheritance tax on that house? Well, and by the way, now imagine a third comparison, that there is somebody who always was poor, worked as a cleaning woman, and the cleaning woman in that notification can also mean a male cleaning woman. Piled up with enormous effort, 30,000 in cash, and now the heirs have to pay a percentage of that small amount of 30,000 if there is not a child but only a niece, because then the free allowance is 20,000. Is that just and fair? And my feeling is we could do better. So that's a question, and that shows why these exemptions, which are meant to give people the possibility to keep certain part of their property, are highly problematic, apart from probably the first one with the art collections and the castles. Now there is something which we have not yet spoken about. These are socially motivated tax exemption in the public benefit or so. You know from income tax already, if something is donated for charity organizations or other organizations which just acquire money and spend it in the public benefit, like the Red Cross, a university, or other things, then what basically happens is that the taxpayer gives away 100% of a certain amount for the public, so for purposes which otherwise the state would have to pay to finance from the revenue from taxation. And so naturally, usually one says that if somebody gives away all he has, 100% of, let's say, 100,000, then you can't really demand that additionally a part of these 100,000 should have been reserved on top for taxation. If somebody gives away 100%, then there should be no tax on that on top. And that is why many states have tax exemptions. when transactions are made in the public benefit. We had that a donations deduction in the area of income tax and corporation tax, and here we have it also in the area of inheritance tax. If you hand over generously an amount to a foundation or another organization which is a registered, recognized charity organization, or if you donate your money even to the state, number 15 here of the exemptions, then this is free of inheritance tax. Number 16, the same if you donate to religious corporations, because that's also in most cases accepted under German law as organizations in the public benefit. Number 17, donations made to a church to public benefit as far as their use for these purposes secured. Number 18, the strange illusion that also political parties are organizations which, on a higher level perhaps, serve the public benefits, and some similar organizations, so that can be made free of tax. What you must know here is that the donations made to organizations in the public benefit, so number 16 here, this is very often highly important for tax planning, because there are many big enterprises where, in order to where they wanted to get rid of the risk of inheritance tax, and so they decided to establish a foundation in the public benefit at the top of the group, which then got approximately 100% of an enterprise below that group, so that, well, the AG could never die, and the shareholder is now a foundation, can also never die, is not the foundation in the interest of a family, but a foundation in the public benefit, so it is free of inheritance tax. And also, when the family of the founder handed over all the existing property to that foundation in the public benefit, this transfer of an enormous property is free of inheritance tax, because this property is now completely handed over to a purpose which benefits the public, and so it's free of tax. Very often this is a well-known tax saving, no, not tax saving structure, but a tax avoidance structure, which is not really detrimental to the state. For example, it might be that you have a group of an enterprise and you want to avoid that the equity of the enterprise will be lowered in the future always by the drain of equity which results from inheritance tax. Then you might hand over the shares to a foundation. That usually happens if the family members of the founder, the managers of the enterprise and owners, have already so much private property that they don't care about formal ownership of the enterprise. And so that foundation holding the shares then collects a bit of the money as dividends and distributes it for a purpose in the public benefit, for example, for support of sports, of science, of a university, or what else. Yeah, and let's go on. Another important exemption, completely senseless, probably merely arbitrary, that is an exemption in German law that real estate property is only valued with 90% of its market value. That has probably historical reasons. For long decades, real estate property was, due to some insufficient rules in the valuation law, real estate property was long time completely undervalued, and when the Constitutional Court criticized that and demanded a valuation with the market value in the future, probably some politicians wanted to grant as much privileges as possible to the holders of houses, and so probably they said, then let's value them with 90% of the market value, because up to 10% deviation is always regarded by German legal tradition as not material, so probably not a reason for a real complaint in court, so we risk that. Then we can still tell our voters that we tried to do our very best, although we were forced to a reform. How officially that 90% valuation is justified, I simply don't know, and I don't care. But what you need for testing cases also, or training cases, is naturally you should know that, because this can easily be brought into a case. What you should then know is that free allowance can only apply if you keep the houses and not if you have to hand them over to others. It only applies to real estate with buildings which are used for housing, so where tenants live in, which are located in the inland, in the European Union, or in the EEA, and which do not form part of a business property or agricultural property, because for businesses and agricultural businesses there are far higher and better privileges available under paragraph 13a, b, and I believe c. We are going to have a look on them later. If you have a family foundation, that rule concerning the houses is also applicable. You remember perhaps, or have a very rough remembrance, vague remembrance of the fact that if one transfers property to a foundation, and that foundation has the purpose to use that property in the interest of the family members and to support them financially, that then you have an owner which can never die, the foundation, and nevertheless the family members get the money from it. And that as a reaction to this perfect tax saving model, paragraph 1 of the inheritance tax in Germany has an additional rule which says a family foundation is taxed by inheritance tax on all what it owns every 30 years, beginning, I believe, with the year of 1974. So most family foundations which already existed in that year are always taxed in the 30 years rhythm, 1974, 2004, and then the next time will be 2034. Whereas if you, let's say, now establish a family foundation in 2021, the first time when the 30 years turn is over would be for your foundation 2051, and so on. Good. Concerning the exemptions for business property, that's enough, and that's a set of complicated rules. That's enough for today. There we are going to have a separate video. Thanks for watching. What you need to remember is just that there is a vast amount of small exemptions, that they are distributed mainly over paragraph 13 of the German inheritance tax, and when some event shows up which reminds you of one of these exemptions, just take the tax acts, look it up if it applies or if it doesn't apply. Thanks for watching. Will be great to see you back soon again, and now enjoy that this video here is over. Ciao and goodbye.